let's talk about Ethereum. So, what is Ethereum? Often called the digital silver, Ethereum is the second largest cryptocurrency after Bitcoin with a total market cap of roughly 300 billion US dollars. Like Bitcoin, Ethereum is based on a blockchain, but it's improved. Bitcoin is closer to digital money, whereas Ethereum allows its users to build smart contracts and decentralized apps or dApps. Smart contracts are what the name suggests, contracts. You offer them using the Ethereum blockchain, and when the conditions you have set are met, then the transaction happens. Now, once you've written the contract, it cannot be changed. But at the same time, you don't really need to trust the individual on the other side. If the conditions are not met, then the transaction will simply not happen. What this means is that the person who sets the contract does not need to trust the person who is actually executing it, and vice versa. The person who is executing it can be certain that they can get paid the same amount they were promised. So I guess you can say that it takes the haggling out of the transaction. This isn't the Grand Bazaar in Istanbul, this is Ethereum. You set the price, you pay the price. No discounts, no I saw it cheaper down the street. And then we have decentralized apps or dApps, which are essentially apps that allow you to use smart contracts and the Ethereum blockchain in a user-friendly way. Some examples of dApps are Golem, which allows you to rent computing power, Melonport, which is a digital asset management dApp, and EtherTweet, which is a decentralized blogging platform similar to Twitter, but because it's a dApp, content posted on it cannot be deleted, so it's pretty much uncensored, which is really good or really bad, depends how you look at it. Then, similar to Bitcoin, there are miners who verify these transactions and receive Ether as a reward, and Ether is the Ethereum currency. When Ethereum was initially launched, a new block was formed roughly every 15 seconds, as opposed to the 10 minutes of Bitcoin, and the reward was 5 Ether. Now, a new Ethereum block is formed roughly every 13 seconds or so it's 2 seconds faster, and the reward has gradually gone down to 2 Ether to preserve the currency's purchasing power and avoid massive inflation. Now, Ethereum does not have a limit or cap on its maximum supply, although this has been proposed on a couple of occasions by its creator, Vitalik Buterin. Currently, there is roughly 115 to 116 million Ethereum on the market. Now, generally, Ethereum is an improvement to Bitcoin in a lot of senses, and it is much more advanced, it's much more scalable. It can handle roughly 16 to 18 transactions per second, or TPS, which is about 3 times more than Bitcoin. And also, if you've heard of NFTs or non-fungible tokens, most of them are actually part of the Ethereum blockchain, which is a very interesting use case. However, Ethereum also has transaction fees, which depend on how much demand there is, whether there is any congestion on the network. A year ago, the fees were around 20 to 30 US cents, but on 27th of April 2021, the average transaction fee was $10.73. So that's a huge rise. But if you think that's a lot, on 23rd of February, the average fee hit $38.21, which was huge. However, I want to clarify that this is the transaction fee when an Ethereum transaction is confirmed and processed by a miner, not the fees that you pay to buy it. It is still good to be aware of them though, as they can deter people from actually using Ethereum. Now, I will not get into the details, but if you're interested in the technical workings of Ethereum, I will add some links to the description below. Also, if you've enjoyed the video so far, make sure you subscribe down below and click the bell icon so that you can get all of the latest videos. Now, why buy Ethereum? Well, for pretty much the same reason you would buy Bitcoin. Ethereum is unregulated, decentralized, and it's not governed by any government body. It is also an established cryptocurrency and therefore carries less risk than most of the other cryptos. It's a great way to diversify your portfolio, but again, whether you want to do that and how much you want to allocate to it, it's up to you and your personal risk appetite. I personally think that it could offer a better return than Bitcoin, although I roughly own the same amount of Bitcoin and Ethereum. Now, why has Ethereum gone up? Well, same as Bitcoin really. Fiat currencies around the world are being devalued as a result of massive printing. The stock markets are overvalued, bonds are at an all-time high, gold is expensive, silver is expensive. It just simply makes sense that investors will flock to an alternative asset which has a relatively low risk but can offer huge returns. And I just want to point out that cryptocurrencies are considered to be a very, very, very risky investment. But personally, the more I look into them, the more I like their long-term prospects. Obviously, do your own research, but I think things are looking very rosy for Ethereum. Secondly, with Bitcoin paving the way for mainstream acceptance, Ethereum and other currencies have also started to be accepted as payment, although it's still in the early stages of acceptance, just like Bitcoin. Now, there is something known as a network effect, which essentially says that the more participants there are in a service, the more valuable it becomes, and this is very important to remember when thinking about Ethereum and other cryptocurrencies. Two good examples are Twitter and Facebook. They're obviously not cryptocurrencies, but you get the picture. Finally, Ethereum's price is correlated to the price of Bitcoin, so basically they tend to move together. However, recently they've started to diverge a bit, which is technical speak for saying that they no longer move together as much. Finally, how do you buy Ethereum? Again, lots of ways. Binance, Coinbase, eToro, Revolut is the second biggest crypto, so most online brokers and cryptocurrencies exchanges will offer it. Whichever way you choose, just make sure that you're the one who owns the cryptocurrency and not the broker or the platform. Make sure it's not a CFD or spread betting, as then you essentially not own the cryptocurrency, but rather you just be betting on the price. Most people I know own it through Binance and Coinbase. They're a popular choice. Personally, I own my cryptos through eToro, but that's just for my own personal preference, and I just find it more convenient, really. Alright, so this was Ethereum in a nutshell. Let me know what you think in the comments below. If you enjoyed this video, like, share it with your friends and subscribe. Thanks for watching, and I'll see you in the next video.